Hello guys, welcome to KryptOkib analysis. My name is KryptOkib, and today I want to be giving you a very important and vital lesson which I call secrets of price action. This is a lesson I don't normally give because I've given you like everything you need, but this is the secrets I use in scalping whenever I want to scalp. Everybody knows, it's open knowledge, that I trade with supply and demand. But then there are ways you can trade the supply and demands to every candlesticks and analyze where you have supplies or where you have demands. I made an indicator showing demand and supply zones, which the indicator I no longer support it as much because I don't use it that much, but I have it added to my chart, which is this. It's a supply and demand indicator which paints any demand candle green and then paints any supply candle as red. Where I have these demands at zones created by the indicator, but then when I come on my chart, I want to personally filter it to see a break of structure before I then take the trade. But today I want to show you secrets, not just secrets, but secrets of price action, especially how you can relate price action patterns, chart patterns, to scalping. And scalping happens on several time frames. You can scalp on the 4 hour, you can scalp on the 1 minute, on the 2 minutes, 10 minutes, 15 minutes, even you can scalp on the daily. So what exactly do I mean? I'm going to be showing you price action patterns, or rather chart patterns, we're using the head and shoulders, market structure, SFP, which is swing failure pattern, and then pivot points or pivot points. It depends on how you pronounce it, but the spelling of that pivot point is this pivot, like this. Some people call it pivot, some people call it pivot. So first, let me show what is an head and shoulder. Head and shoulder is a price action pattern. Where is it? Head and shoulder. Okay, this is it. Where you have a move like this. So here you have the left shoulder, the head, and the right shoulder. Again, you can have it move like this. It can also have like equal necklines like this. This is a more subtle one, which everybody uses, where you have price action moving, rallying, then retracing or having a pullback, creating an higher highs. With market structure, we know that price going below this particular major lows, leading to this high, is the invalidation point. It comes to it, gives a bounce, but that bounce is with little or no momentum, couldn't go higher to continue the bullish structure, then it comes to break that length line. This is a perfect head and shoulder, but then head and shoulder do come like this. In as much as this is an head, this is a left shoulder, this is a right shoulder, then it breaks the diagonal neckline. I don't like there. You have to filter some of these things to personally or better suit our needs. So I just want to use the perfect one. Whereas we have some head and shoulders like this, will this become lower like this. There are several types, but the moment, as you can see with market structure, we have this move up, move down, move up. Break of this low is invalidation. Then this is a bearish retest and then crashes down. That is the point it forms an head and shoulder for pattern traders. So now that we know what an head and shoulder is, let me quickly show you what an SFP is. So as a matter of fact, I said I want to talk with head and shoulder. Also, head and shoulder, we can also inverse it to make inverse head and shoulder. Then market structure. I have spoken about head and shoulder and market structure right now. I shouldn't be doing this normally, but I just want to show you how I scalp. But then nothing is perfect. You have some losing trades, you have some winning trades. I've also pointed out the head and shoulder with the market structure. So I'm gonna point out SFP. Then all this then becomes a pivot or a pivot. Then at the end of the day, I'm going to show you the supply and demand zone in it. So you can trade it either way you wish to trade it. So I have shown you the head and shoulder now and the market structure. Now let's move to an SFP. So what is an SFP? An SFP, everybody knows that when we have a move up, like this, then we have a move down, which is a correction. This point becomes a swing high, right? Some people might call it a local high, but it becomes a swing high. Then we have from this move up like this. If this price movement to the upside ends up closing above of this swing high, then it is a perfect swing from this point 1 to this point 2. That becomes a perfect swing. But what if this price movement just moves from this particular point 1 to 2 and then closes back inside of this swing high, this last swing high, which means we are trapping bull traders, bull trap, or we are hunting their stops, or we are hunting short stops and trapping bulls. Because if this movement, assuming this is daily time frame right now, where we have this move to the upside, when this price breaks this particular swing high, some people have their buy stop here, which means they are getting filled in on a long. Then they have their stop just someplace below. I think I did something like this with one chart, I think Luna chart, some days or some weeks ago, few days ago anyways. So when they have breakout traders trade buy here on breakout of this point, maybe without close, maybe if this is the daily time frame, they may be on 4 hour they are buying, but when the daily closes, it comes back to close right inside and below of this swing point. That is what we call an SFP. As a matter of fact, there is an example of it right here. We have this swing move up here, then we have this swing high, then we have the pullback to this point, then we have this move up. As you can see, we have a wick above of this. Support and resistance traders, some might be shorting at this point with their stops above this point here. So to them, their stops are being hunted. That is a stop hunt to them. Support and resistance traders, some people are seeing this as resistance points and then have their stops just a bit. Let me remove this magnet too, just a bit above it, and then this wick is removing their stop losses, which means it is a stop hunt to them. But then we have breakout traders whom at these particular highs, they want, the moment price goes above these highs, they want to get filled in with buy stop. So they are probably placing their buy orders here, or even they are placing their buy orders here. And what do we see with these weeks? We see this week filling them in, taking them in, giving them that buy order, then only to come back and close bearishly under this past swing high, causing an SFP. SFP is when price moves up and then closes below that swing high. And then what has happened to these long breakout traders? It has trapped them. That is what we call bull trap. So SFP can also be referred to as stop hunts or bull traps. So the traders have been trapped, stop have been hunted, then price comes back to close within hit. That is what I'm trying to explain at this point. So the moment we have that closure below this, that is SFP. So that has also been discussed. These 3 or now these 4 has been discussed. So that is an SFP. Then when we talk about pivot points, what happens when we talk about pivot points? Pivot points it can be a swing high or a swing low. So let me quickly use this head and shoulder pattern again. Oh, I don't have it right here. I think is this now where it is? Okay. So we have this price movement like this, and we have or let me just use candles. Okay, let me use swing first. So we have this swing, then we have this swing, then we have this swing. So this head becomes the pivot point, but we do talk about it per candle or on a candle to candle basis. So let me quickly show you on the chart. Or it just means where we have a candle movement like this, one candle, then we have another candle, then we have another candle here. So a candle which has, in a bullish candle, in a bullish structure, that is a candle which has to its left hand side, which this is the left hand side, a lower high, and to the right hand side a lower high. And in a bearish format, then we have one candle like this, another candle like this, then another candle like this. That means a pivot point to the on the lower side is a candle with which has on both sides lower lows, higher lows. This is the first candle on a higher structure or in a bullish structure. It has lower highs to its right and its left. But in a down movement, the pivot point is a candle with higher lows to its right and to its left. And if we look at this is per candle basis. If we look at this on a swing basis, what does it look like? This is a swing movement which looks like this. And this candle then becomes this. Then this other candle becomes this. So in head and shoulder or inverse head and shoulder, we say this is the left shoulder, this is the right shoulder, and this is the head. And looking at this structure too, this is one candle, a down candle, another down candle making a lower low to this low, then another candle to the right making an higher low to this low. So this become our left shoulder, this become our right shoulder, this become the head. So in a bullish structure too, we have this as a right shoulder, then the head. So we have transformed this swing movement into a per candle basis, which means if we open, I wish this per candle basis happened on the daily time frame. When we go to the 4 hour, 1 hour, 30 minutes, what we see is an head and shoulder. I don't want this video to be long. It's going to be in 2 parts. So that is what pivot points are: a low or an high having to its left and right lower highs or higher lows. That is a pivot point. You already know what supply and demand is. So now how do I scalp with all of this in mind? So head and shoulders agree at the same thing, obviously, with what a pivot point is. Because head and shoulder is a move. Head and shoulder is a move that has a swing move, rather, that has lower highs. Two lower high here on its right and left side, which then forms a left shoulder and a right shoulder. And then a pivot point is a candle high with lower highs on its right and left hand side, which means each single candle can then become, or on an expanded level, a pivot point is also an head and shoulder or inverse head and shoulder, depending if it happens on the way up or on the way down. So pivot and head and shoulder can be basically the same thing. But we see head and shoulder, and we call it head and shoulder in swing moves when it's expanded. Then we call it pivot in single candle moves. Like this point right now, this down move has an higher low to this low, and this next candle has an higher low to this low. So that is a pivot. If we expand it, are we going to see an head and shoulder? Probably, there is something that we have to wait for confirmation. We have to wait for it to be confirmed before it becomes valid. Now look at this. This particular lows, let me make this chart a bit bigger. So we have this particular lows. Magnet back on. this low is quite lower than this low, right? And this low here is higher than this low. So this means at this point we have these three candles, we have a pivot point here. Let me take this back a bit so not to disturb me. Then let me extend this to the right, not to disturb me. Now let us try and expand this on a 30 minutes time frame and see what we have. I think I might zoom this back in so I can see clearly. Okay, so now we can see some market structure even here. We have a move down to the low side, to the high side, back to the low side. This becomes the invalidation, right? Then we get it taken clear of. That means this point we have some form of demand there. I'm not looking at data to the left. So let's see, this happens to then be that very low. So what do we see now? We see this point, which happens to be maybe the left the left hand side candle, which was the higher low, and this becomes the head, which is a lower low. And then this minute candle here, because we have a move to the upside, then a move back down before the big rally. So this becomes the right shoulder. Are you saying that now we have another shoulder? Now let me even go to the 15 minutes time frame. Maybe it will even be more expanded. Let me squeeze this. Okay, see the same thing. So we have this. Now all this becomes the left shoulder, the head, and the right shoulder. Let me go to the 5 minutes time frame and see if we can even get it clearer. I hope I'm not at the back. Okay, then let's do this. So you can see it's still the same thing. Now we have this left shoulder, this head, and then this right shoulder, and this will be the neckline, right? This will be the neckline, which also happens to be the point of invalidation. Then we have the rally to the upside. So that is an head and shoulder, and pivot points can be the same one and the same thing. So I'm going to take this structural end and shoulder, or this swing end and shoulder now, into a candle to candle basis, which means what I'm looking for now in a trade is I'm looking for something I can use to draw a candle. Okay, let me use this. So what I'm looking for now is this. Something, let me use this. Assume we are on a move down, then something, we have a candle like this. We have a wick to the bottom, a wick to the top, not necessary. Then we have another candle open, which goes lower. Then wick to the top, wick to the bottom. Then we have another candle which opens like here, then move up like this. This has to be a green candle for it to engulf this, and for it to be a bull candle, then it has to be a green candle. So it opens at this point, then has a low, but see the cash and a high. But see the cash here, this low, right? It's not lower than this low. That makes it the head and shoulder. So this is our head and shoulder on a per candle basis. And if you want to see your market structure in this, it is quite simple. This is it. Let me show you. So here now we have this highs, right, to this low. I'm not sure if you are seeing this. Me myself, I can't see it clearly. What color? Black. So let me say we have this move here. Let me do it like this from this point. This is this side, right? We have been moving to this low here. Mark that. Then from this low, we have it moving to this side. Mark that. Then from this side, we have it moving to this low, right? Mark that. So what happens? This point here now, in market structure, is our point of invalidation. So for this point to be the point of invalidation, we must break and close above of this side before we have a bullish confirmational bias, before we accept that market trend has changed. And once this happens, that is when your market structure, what's it called? Head and shoulder has also formed. So head and shoulder traders, they might not be looking on a per candle basis like this, but that is what it is. We have a downtrend, which means we have higher high to a low, a lower high, a lower low. That's a downtrend. Then we have a break of structure here on 3 candles. This is a scalping strategy, right? So once this candle breaks and closes above with higher lows here, higher low here than this, and higher low here than this, that is perfect. Then what do we want? We want a retracement back into this particular demand zone that we have here. Some people can choose to use the wicks of that pivot candle, and then we expect a move up. But I personally, I wouldn't want to take this more than 1 hour. I wouldn't want to take the trade of this more than 1 hour. So once we have a break of structure here, we already have our left shoulder, our head, our right shoulder, which these 3 together is also a pivot point. But then there is one particular tweak to this which I like to trade. Looking at this, it's a perfect head and shoulder, but then I have noticed that this particular structure doesn't usually work. So let me reveal the main secret here. So we have this candle move down. We have wicks to the top, wicks to the bottom. Then I want to see an SFP. That is why I have SFP written down there. So candles open here. We know it can go like this during the day, but I want to see an SFP. And for it to go down during the day means we have a wick to the bottom like this. And it is an SFP because this is a per candle basis. But if we open this to be a full swing like this, that means this is our swing point. This is our swing guy. Then we have a move underneath it, and then a close above of it. So it becomes an SFP. Then I want to see the last candle, the green candle now, opening and closing above this candle size. It does not necessarily have to be a pin bar, but pin bars they are good. But then what I want to see is the SFP. Here can have an high, or it may not, it may be the close or the open, doesn't matter. So this SFP here now, is showing me, as I've drawn the market structure, right? This low to this, this side to this low to this side to this side. This is a break of structure, right? And a close above it confirming readiness. Now this SFP now is showing me that we have a neckline, and this is the point of invalidation, which is also the low moving to the last, the high moving to the last major low. Now let me draw this like this. Let me change this to black again. So what happens here now, I want to draw the example that for you, is that we have this move from this point to this low. Yes. Then we have from this low to the high to this side like this. Then we have from this side to a lower low, which is this. We have a close, an SFP there, right? Now let me do this. That means we have, and this low, this is this low here, right? This low here, this is the low here. So we have a close back above of it. Exactly. That is the SFP. Now, what do we expect in normal when the trend is bearish? You expect it to go lower, but that's not what happened. So we then, from this point now, or like this close, which close above of this lows, then we made this low. That means price then moved to create a higher low to the right, which is this low. Then it broke above this side, which is this size. This side is this side. It broke above that high and closed above of it. So we have a close above of this side, which is also this side. And then what do we have? We have our left shoulder, our head, our right shoulder. So we have an head and shoulder. And in market structure, this is, what's it called? This is market structure, right? This is move down, move up, move down, lower low, invalidation point can come, but then it becomes one, right? So we have an invalidation to the upside, and it created head and shoulder. Sometimes it just from here go like this, and that becomes a perfect double bottom. Double bottom also happen in this type, where we are not talking about double bottoms now. So where do they have your demand on this point? You have your demand. Some people can use the highs, some people to the lows. So we have from these lows now, I will use from this point here, which is these highs. But then looking at the candle, this is not candle, it's line. But looking at this, I will rather use the open of the candle. Sometimes maybe the highs. So this become our zone for a quick 1 hour movement. So I will then expect price confirming this break of structure here, confirming this demand here with the head and shoulder, with the pivot points we have here. I will expect a move to return this zone, and then I will get up back at this side or anywhere my wanna raise, because we are dealing with per candle basis. When you have single candle like 1, 2, 3, you don't expect it to hold water like the way this point, and this point we hold water. What I'm trying to say is the big time frame or the bigger picture will always hold precedence over the smaller time frame. These three picture you see here on smaller time frames is an head and shoulder, but on a particular time frame it's just 3 candles. And if this happens to be daily time frame and you're trying to take this trade, it is for scalping. But when it is a perfect swing like this on that daily, then you know this move has larger precedence of going way higher than when it just happens to be just 3 candles on that same dailies. So that is why it is a scalping strategy. Now we have to backtest this. And I like making indicators. Like I said when I first started this lesson, that I made an indicator for this. I took this trade, it worked. Waiting here, but I'm no longer waiting, because by the time price breaks this low, that's the same validation. But then if you see something happening here, we have this move here. So that may be the shoulder, the head, another shoulder. And then what do we have at this point? A demand. And then we see price coming into it and trying to bounce. Market conditions right now is not that good. So if it's going to hold, then here will be a point of exit. But then looking at the general trend like this, then you may expect higher, because now it has become part of a bigger play. So I want us to do something to backtest this 3 candle strategy for scalping, but then I don't want us to do it just by going back in time or looking at the chart to see blah blah blah. I like to make a code for it, a Pine script. So once I see it, you can easily identify it, not to waste time. As if you're looking for demand with this set of this green candle, you can say, okay, you have this green candle, it's showing you the point to look. You look at it, you see a break of this side, you just say, okay, I'm taking this demand. It's weird. Okay, this is an rally based rally. Okay, this is a, what's it called? This is also a rally based drop, blah blah blah. Then here we have a rally based drop here. So it's a pointer. So I'm going to make a code, and with that code we are going to see how these 3 candle formations works. If it works, and if it doesn't work, we are going to know. So in the next lesson we are going to discuss and how we make the code, and then we are going to backtest this 3 candle strategy using the head and shoulder, the market structure, the S&P. So this pivot point and head and shoulder now is basically the same thing, and with our support, only supply and demand. So let's end this for now. Thank you for watching.